Hi, good afternoon. Welcome to the marketplace. Coming up, West Africa expected to experience a boost in economic development when West African capital market integration is completed.
GDP of West Africa is about 777 billion. And with this, by the time we integrate these capital markets, it will increase the GDP of West Africa.
With just a few days to the presentation of the media budget, we hear expectations from the business community.
We still believe that there are structural rigidities that need to be tackled. These are the engagement we seek to see the finance minister table in the midterm budget complement.
And on Let's Talk Tech, what next after former African employees of Twitter reveal they have not received their severance packages 3 months after they were laid off? My name is Daryl. Kwawu. Thanks for being with us. Details coming up. Thanks for staying with us. First up, the West African Monetary Institute has said that the Economic Community of West African States, ECOWAS, would experience a boost in economic development when the West African capital market integration is completed. According to the Institute, a fully integrated capital market will improve liquidity access and strengthen the economies of the West African bloc. There's more in this report.
The West African Capital Market Integration is an initiative by the West African Monetary Institute to establish an integrated platform for the listing, trading, and settlement of capital market securities and transactions. The project, which is being implemented in 3 phases, will work towards the gradual integration of the capital markets in ECOWAS member countries. Speaking at a capacity building to sensitize players in the financial market, the Director General of the West African Monetary Institute, Dr. Oluronsola Olowofeso, explained that the program could boost the GDP of West Africa by over 10% in a year.
Look at the GDP of West Africa. It's about 777 billion. And with this, by the time we integrate these capital markets, it will increase the GDP of West Africa. Let me put it that way. But now, if you are recording 777 billion USD, you are looking at having over 800 to 900 billion. And that would be a plus to Africa in terms of job employment, in terms of liquidity, in terms of IT infrastructure.
The Director General of the Securities and Exchanges Commission, Reverend Daniel Ogbami Tete, said the move will deepen and enhance Ghana's securities market.
As we implement the initiatives in our capital market master plan, the Ghana market will become more attractive. So within the context of an integrated market, it means that we'll be exposing the benefits of the Ghana market to other practitioners. So I think that we shouldn't be worried that the integration is going to cause problems for us. I think that rather it will open up to better opportunities to even deepen our market. So we are not sitting down. We are working on ensuring that we are deepening our market. We are building capacity. There are so many initiatives that the SEC has rolled out. We'll continue to do that. It will actually make us competitive.
The Chief Executive Officer of the Ghana Stock Exchange stated that the move will offer improved diversification of funds, which could reduce risk.
It also means that there are diversification tools and risk management tools. When you are a fund manager, you can structure a fund that says that maybe 70% of my portfolio is invested in Ghana and 30% of it is invested across West Africa, and therefore I'm hedging my Ghana cedi currency against maybe Naira or CFA or etc. It means the same for other investors say in Nigeria, that will be coming to the market.
The initiative will be powered by the Pan-African Payment Settlement Systems and will seek to create one market with improved opportunities and a stronger bargaining power.
Well, in a few days, the Finance Minister, Ken Ofori-Atta, will present the mid-year budget. The business community has been sharing expectations ahead of that. They are calling on government to find diverse ways of addressing Ghana's economic challenges rather than focusing solely on introduction of new taxes. They spoke at the pre-mid-year budget forum organized by Joy Business.
The economy, according to the Ghana Statistical Service, advanced by 4.2% from a year earlier in the first quarter of 2023, compared with a downwardly revised 3.2% rise. Though we've seen some positive signs in the economy, the country has been grappling with a severe debt overhang, soaring inflation, and continuous currency depreciation, coupled with Western living conditions for Ghanaians, prompting the business community to raise some concerns. According to Professor Bokpim, there's the need for government to find a good balance between expenditure and revenue.
The approach we have adopted is suboptimal, and that is why we agree with the private sector that the approach government has adopted under the program would disproportionately affect the private sector and undermine private sector competitiveness, and that is a cause for concern for us. And also, whilst we have advocated for expenditure cuts, the kind of expenditure cut government has done under the program is actually not the kind of expenditure cut we had wished. Okay.
What kind of expenditure cuts would you have wanted to see?
We were expecting more of the government reducing the size, merging some ministries, some agencies, departments, and then costing that, and probably we may achieve the same goal, okay, by reducing those expenditure as compared to increasing taxes, introducing new taxes, and increasing rates of existing taxes. Look at it from the approach you are coming from. We are majoring on the minor. We are not just asking reducing the number of ministers. We are talking about ministries, we are talking about departments, we are talking about agencies, and also rationalizing state-owned enterprises. In other words, the cost of our governance is just too much for our national budget to sustain.
Ghana has a large and very active consumer industrial products and services sector that provides products and services to the Ghanaian economy and the West African sub-region. This sector is poised for significant growth over the next few years, but President for the Association of Ghana Industries, Dr. Enyim Dake, maintained that the sector is battling with taxes.
Our businesses have been stressed within the context of the macro. They led to a lot of contraction into our business operation. It led to low growth. It led to low unemployment. You can also trace that it led to the distortion of original business model of processing and manufacturing, where you realize that by virtue of these macro indicators, a number of businesses resorted to importation of finished product as against processing and producing, and its relevant impact in terms of job creation, taxation, and it's exposed the country to a lot of informality. And there are consequences of a high informal sector in an economy, at least developing economy. So these ramifications are all associated with the gains and the minuses of what we've gone through over the period. And therefore, yes, our businesses are stressed, but by virtue of the IMF transaction, restored confidence to which we are planning effectively. And we look forward to other indicators that are work in progress, because the IMF process is not a one-time transaction, it's a process. We need to go back into the inflationary rates. What do we need to do regarding the inflationary rate? You asked my colleague about the effect of the inflation on our businesses. And that, I mean, every player in the space knows that the higher the inflation, the challenges it is to businesses. Nonetheless, our concern is how is Bank of Ghana managing the inflationary issues. And we know they've deployed a number of tools to aid curtail the inflationary figures. Nonetheless, the producer price index and the run-through effect of some tax adjustment has also led to the state of the inflation. We've also argued out on the inflation targeting model that the Bank of Ghana uses. Nonetheless, we still believe that there are structural rigidities that needs to be tackled, and those are the engagement we seek to see the finance minister table in the midterm budget, complementing it with that of the IMF policy and report to aid us navigate these difficult macroeconomic factors that we face.
This may be very common, but as a result of these new taxes, Chief Executive Officer for the Ghana Chamber of Commerce and Industry, Mark Bedu Abuaji, says members of the chamber have no choice than to lay off some workers.
I think government should do everything possible to bring some relief to businesses. Some taxes that I want to see, some abolished and some review. One is the e-levy. I think that the rate is too high. The other one has to do with the COVID tax. I don't know why we still have COVID tax or COVID levy as part of our tax structure, after it has been declared by the WHO that COVID is not a pandemic. We have to take this tax out to bring some relief to businesses. Secondly, if you look at our policy document nowadays, there's a general statement that you are going to create a conducive environment for businesses. We all know what a conducive environment is. Low taxes, low inflation, lower interest rates, lower utility tariffs. With all the things that are happening, I don't think that we are going to have that immediately. So that general statement, I personally do not want to say it. They should come out with specifics on how they are going to create this conducive environment for businesses.
Foreign direct investments in Ghana amounted to $1.88 billion in 2020, which represented roughly 2.7% of the country's GDP. Compared to 2019, the FDI inflow decreased by $2 million. Ghana's mining and agricultural sector are major areas for direct investment equity flows. Now, President for the Ghana Union Traders Association, Dr. Joseph Obin, says all these foreign direct investments should be tied to local businesses.
What we should all know is that a vibrant private sector drives any economy in the world. So it is important that we create the enabling environment that will make businesses thrive so that we take the whole economy along. And that is what we are not getting right now. That rather the private sector is being contained and that they are unable to expand. We don't have even the space to develop and grow. And that has been the problem, because the excessive taxation, this is what it does to the private sector, because we are not competitive. If even we want to produce as a nation, we cannot overprice our produce, that we cannot even sell our produce to the neighboring countries because of cost of the produce, like the manufacturers have been complaining about. And that's why we continue complaining about excessive taxation. And we can easily also expand the tax net without necessarily putting a lot of pressure or imposing taxes on the few that have the capacity even to grow, because they are the identified ones who can actually pay the taxes. But when we do that, we are only trying to stifle the growth of those industries which otherwise will be the driving force of our economy. Now we're talking about importation. Importation, I have a serious problem with importation, because if we do more importation, it means that we are not helping our local manufacturing companies. We are not even trying to be self-sufficient.
But that is what you do.
Yes, I like that. But let me also tell you that the import that happens in this Ghana, we do not own this economy. Ghanaians do not own this economy.
That is true.
That is a fact. The export earnings, we owe only about 60% as a nation. The rest does not belong to Ghanaians. That's why we always have the problem of foreign exchange, because it goes and it does not even come, because the money does not belong to us. Importation that we do, the excessive importation, only about 20% is for the indigents. over 20%, and the 80% all belong to foreigners. And so, whilst we are talking about exports being in the hands of foreigners, the foreign dominance of this economy, you think about communication. This communication industry, the money that goes there, even the banking is not in our hands. We talk about oil, we talk about gold and all that. We are not getting the benefit thereof. And that we have to even think about that. So if we think that we are doing excessive importation, that is not helping the economy, there's a way to do that. That's what we have to use our regulations, our investment laws, and the rules and regulations to contain excessive importation. Now we are talking about import substitution. It's in the right direction. If you are able to identify where we have the comparative advantage as a nation and even support those industries so that we become a hub of manufacturing of those identified products, then of course we have a way. And then, of course, government should do everything so that Ghanaian businesses or investment, foreign direct investment, should be tied up with the local businesses.
Okay.
General Secretary of the General Agricultural Workers Union, Edward Kariwa, is also calling for a national discourse to find lasting solutions to address Ghana's economic challenges.
I think that we are applying an outmoded economic development policies to try to develop ourselves. You know, if we think that we can still go with this fixation that you can generate revenue by increasing your taxes and tax the same people all the time, certainly it is telling us that it's not working. You know, yes, revenue will automatically come up, and it will come up when your capacity to generate the revenue is strengthened, you know. But it's not just about how much you are going to tax the person that would necessarily translate into your revenue. When the person does not have capacity to do what? To contain that tax. You know, so I would think that we need to review our economic policy to know that tax is good to generate revenue, but tax should not be the first call to generate revenue. It is rather to empower production to go on. Unfortunately, the figures as we receive them from the Statistical Service are not giving good account of what is happening in production. You know, all the productive areas are declining, and yet they are the very people that you are taxing. You know, and as I indicated also, it seems they are not interested in getting to those who are not paying taxes at all. You know, of course, I pay my taxes all the time. You know, and any consumption I do, I pay taxes on it. You know, and even people who I give money to feed also pay taxes on it. So all the time, even when you are sleeping, you pay tax. When you are awake, you pay tax. You pay tax in the morning, you pay tax in the afternoon, you pay tax anywhere you go, you pay tax. You know, and that is not how you can grow the economy. I think that we need a national discourse to actually fashion out an appropriate economic development policy for this country. You know, the way we are moving on and thinking that it is only taxes that can generate the revenue that we need, of course, we are killing businesses all over.
In May 2023, Fitch Solutions forecast that the Ghanaian economy will expand by 2.9% in 2023 after a growth of 3.1% in 2022. Fiscal austerity, high inflation and restrictive financial conditions will dampen private consumption and investment through 2023, clouding economic growth prospects.
James Shen bringing us a wrap of the pre-media budget forum organized by Joy Business. Just in case you missed, with just a few days to the presentation by the Finance Minister highlighting, as you have watched, the concerns of the business community. Well, let's talk tech. According to a CNN report, former employees of Twitter Africa were laid off as part of a global cost-cutting measure after Elon Musk's acquisition have not received any severance pay more than 7 months since leaving the company. In late May, the former employees who were based in the Ghanaian capital, Accra, accepted Twitter's offer to pay them 3 months' worth of severance, the cost of repatriating foreign staff, and legal expenses incurred during negotiations with the company, but they have not received the money or any further communication, according to CNN sources. So let's bring in Henry Kobler, lead for Eyes of Africa, to discuss this. And Henry, good afternoon to you. I remember us discussing this when Twitter laid off staff from its Ghana office. And if this report is true, are you surprised about the turn of events?
Thank you very much, Daryl. For me, I'm not surprised by this. Generally, I think the first one we had to discuss this, I had mentioned that, right from the set go, Africa had not been the plan for Elon, and even through the purchase point. And so generally, firing almost everybody from the African office was just a good indication to let us know that he's not interested, and he basically is not even giving credence to anything that comes in from Africa. And so generally, I think that having a communication as far back as May and having no communication whatsoever and still having an offer on the table, I think that definitely gives a very vague indication as to how we ourselves as Africans are also being viewed, especially to multinational companies that are basically tech-based, and how they relate to people that are here. I'm not surprised again, because generally this is not the very first time we've had such instances. There are quite a number of people that have also resorted to working on remote with international companies, and they're sort of facing the same thing. I think that based on our conversations that we've had, we mentioned that one of the best things is to look at the laws which regards labor with international working conditions, whether in or remote, especially when it comes down to the tech sector. And generally, this is how it's playing out with Twitter people. But I think that it's also going to cut across quite a number of companies very soon. They're going to come in.
It looks like Twitter is going to be sued from all indications.
Do they care? They don't. Generally, they've had a lot of lawsuits coming in all around the world, with several employees actually putting in suits. And so the focus has really been on that. Generally, this is also what is giving credence to some of the employers moving on to different tech companies and then pushing up their trade secrets to them. Generally, this is a trade-off point for them now, but I don't think that they really care if they're going to be any suit. I don't think that it's going to be as huge as they're going to run away from. They actually on their roadmap in settling other employers. But I think that generally, because we don't have any force coming in from Africa and any labor laws actually governing the way we work and all of that, I think that that's going to be a downfall when we have to look at what exactly is happening within their terrain. But I think that they're going to have some suits coming in. I've reached out to personally to a few of the people that are working here in Ghana, and generally their response is not even favorable. They are not even willing to come out to speak. And so that gives you the indication that they are not really looking at some level of force. They're just only waiting for a good turn of events.
Yeah, it's important you talk about labor laws, because the next question I was going to ask you, who is Twitter accountable to, seeing that, these are rights of workers. These are stuff that they were entitled to, and they are not receiving it. We're talking about, I think I read $500 million worth of severance. Can Twitter make any excuses? Do you think, well, you said the managers don't really care, or they are thinking about more important stuff such as threats?
Yes, generally, so our labor laws really has not looked into the future of tech, the future of work, and that becomes a bit of a downward point for us. Again, I think that the people that are already in this processes generally also do not engage the experts and the policymakers right from the word go, and so they only get to turn to them whenever there are only issues. I know quite a number of people. I basically run a freelance application point, and you're looking at people working from home, people working from globally. Not sort of restricted. And so if we're not generally having policies that are guiding this from the word go, I think that when issues like this come in, the bigger boys would always have their say in there. They sort of, with Twitter themselves, they're actually looking at other important things. They're going to look at putting suit for Meta and all of those things. Those are the things that they basically looking at settling in with new policies within their own organizations. I think those are priorities for them. Suits that is coming in, I don't think that it will be a big deal for them to worry too much. Money really might not necessarily be the problem. It's more of putting in your policies, sustaining the platform, making sure that Elon's vision for the platform comes into play. I think that that's really a bigger point for them. And so for us here, I think that we should start looking at the labor laws, the labor policies that guide tech working conditions in Africa, tech working conditions in Ghana, especially freelancing points. There are people that are enjoying some good value when it comes down to working with freelance applications, and they really don't declare any taxes or any other things. And so they're sort of comfortable because they're making some good money there. But when the terms and conditions really strikes off and it's not in their favor, that's when they sort of look at the labor laws. But I think that the policymakers should also just really follow the trend to understand that work is not that 24 or just going to work at 8 to 5, but it's basically changed, and they should look at the future of work and how they can put in some good policies to make people that are working or the youth that are coming into work, setting up startups, are actually on the good point. I mean, this cuts not just with Twitter, but even our own startup ecosystem in Ghana. I mean, do we have a proper policy that is guiding employment points for startups and people that they are picking up interns, national service? I mean, how is it governing the whole process with that in there?
Henry, 30 seconds. I want to ask you about this because we are monitoring. It appears that Threads is not quite threading. According to web analysts, the usage has dropped by half from its initial surge when it was launched. What do you think is happening here?
Thank you very much. So I think that it's predictable. I mean, we mentioned this, right? So I'm actually even expecting a more downward fall with this. I mean, generally when it came, everybody wanted to experience what exactly it is. But knowing Facebook and how they play, I mean, I think that is just a copycat. It's really nothing special. The people still having conversations on Twitter, they're already there, they feel comfortable there. And so sort of moving to another platform and juggling between applications sometimes becomes stressful. And so definitely I'm looking at a more downward trend. I've seen them doing advertisements inside the Instagram application, their policy in terms of whether you have to delete threads, it means you have to delete your Instagram. Relatively is going to keep people there, but their usage, the daily usage is really not going to be interesting.
All right, Henry Kobler, lead Eyes of Africa. Thank you so much. That's the marketplace. Thanks for watching, everyone. More news on our website, myjoyonline.com/business. Quick credit dissociates itself from viral video by a comedian, myjoyonline.com/business. Thanks for watching.